All right, and good evening, strategic traders. How y'all doing tonight, this evening? Well, guys, let me tell you, we had a real roller coaster ride yesterday, Sunday, going into Monday. We took a spread on the euro pound, and as you can see from this big, huge red candle, right here, we were pretty good on that call. Now, unfortunately, it did not yield the exact amounts that we were hoping for. We were hoping that that run continued on, but it did confirm a belief, a not more of a belief, but a hypothesis that I come up with that right now that the euro pound is severely overbought in the actual real world sense of it. Maybe not the technicals, but in the actual cost price analysis of it, we're not going to go much higher on this. And today's drop, that big red candle smack dab in the center of your screen, confirmed that for me. And right now we're looking at a 5 minute chart, and you'll see that price is still in this consolidation range. Now, you can come up with all kinds of levels and all kinds of theories as to whether this is going to be a breakout one way or another. For me, the determining factor is, like I showed you yesterday in our other video, is looking at the long term effects. Let's go back and look at a 4 hour chart. And now you can see that we are making our way down. Let me get some of these lines out the way here and clear some of this up for you guys. We have a lot of these working elements on here, and sometimes they just get to remaining on your screen as you move on, and when you go into higher time frames, there they are again. But it reminds you where you've been. So now, looking at a 4 hour chart of the euro pound, you'll see that right now we are clearly at a support level. And if we go through this support level, we have all of this range down to the 87 handle that is available for us. I see that happening. So let's go ahead and pull this back out to a 1 day chart. Now, on a 1 day chart, you can see clearly that once again, we are sitting high at the top of this range. We're sitting high at the top that, we've gone here before, but putting back data looking way back to 2015 and further, 3 years worth of data, we don't remain at these levels for long, not with the euro pound. The euro pound is what I like to call a twin currency. They pretty much mirror one another. The euro and the pound are like twin brothers. So there's not much volatility. There's not much action in this currency pair because there isn't much conflict in between the two. So what you have is a relatively stable currency pair. So now that you can see that we've gone here, we've made this range, and now we're back in the middle of it, but we're on the downside. We've already pushed up for quite a number of days. You can see this clearly. Now, here's our retracement. And we are about a quarter of a way into this retracement. I see us clearly going down to the 86, 87 handle. And that is the way that I will trade this. Now, we have a system, everyone knows this, of multi-platform insurance trading. And we use the butterfly trading system as our base, and we ensure that to make sure that we have a profit. Everyone knows this. But is this the right strategy when you have an actual directional bias in your trades? I say yes and no. Yes, you can insure your trade, but no, you should not take it in a way that you are going to willingly lose a trade when you don't have to. In this case, what we should do is we should take a in the money position above. We should sell the euro pound, and we should sell our contract, and we should insure that contract. Okay, we should ensure that contract, if price does come back up and revert, hey, we have insurance and that contract is not lost. Should we take a in the money buy? I think not, because if price is going to come down, then why go ahead and willingly throw that money out and save it and do all of that if you don't have to, if that is your belief? But what should we do? Should we just leave it empty? Well, you could, no harm, no foul, but why not do this? We take an in the money call and we sell this in the money call as we would normally anytime. And where we normally would buy a $75 contract in the money, instead we buy a $25 out of the money call. We say that our price will reach this bottom level, and now we have a directional bias going down. We can ensure both trades by simply putting our insurance on top. So if price reverts, it will trigger our insurance and it will cover the $75 and the $25 contract. We save $50 on this methodology. Instead of having 75 and 75 of 150 of risk, we now only have 75 and 25, and we increase our profit potential. Instead of having 25 and 25, we have 25 and 75. If that $25 out of the money call is good for $100 at the end of expiration, that is $75 added to that. Now you can also play it conservative and have a take profit placed at the money. So when price reaches that actual level where you have your contract, if you pay $25 for, it will automatically close out at a $50 profit. So now you have made your $25 there. And these are many, many ways that you can play that situation. Now, as far as strategic is concerned, and what we're going to do in this case is I will go ahead and insure the top strike when we place it. That will be insured. We will also insure the bottom call. It will be an out of the money $25 call. So we are looking to take advantage of this bias. Now, this is the flexibility of both options and our system. But more than that, this is the clear thinking of our minds. This is the logical way to approach not just this trade, but trading in general. Do not go into these situations thinking about what you want them to be. You have to look at them for what they are and find out and discover what are the most effective ways to achieve a profit in this. That's what I believe. Now, before we actually go into our trades, I want you guys to think about what we've said here, and I want you all to come up with some solutions, ideas, questions, comments, criticism, anything that you have that would be input that would be crucial to helping us grow as a group, as a company, as traders. Let me hear your feedback. Let me hear your thoughts. Go ahead, and the first couple people that shoot me back a few thoughts, I got something special for you guys. The time is now 4:27 in the p.m. and Central Time, 5:27 Eastern Time, at 6 o'clock Eastern. 6 o'clock Eastern Time. We will come back and we will make the actual trade for this currency pair. Guys, I will see you then.